Welcome to the Fintech Founder Journey, the podcast that explores fintech and the founders that power it. We look at how to build better fintech products, better fintech businesses, and how to work on yourself to be more successful in all that you do. I'm your host, Mike Scott, and I'm also the co-founder and CEO of Nona Digital, an expert firm that consults on, designs, and develops software for fintech companies around the world. In today's show, I'm joined by Matteo Rizzi, who has been deeply involved in fintech for over 20 years as an investor, founder, innovator, author, and many other things. And we'll be covering a broad range of topics about where fintech is and where it's headed. This podcast is sponsored by ourselves, Nona Digital. We are an expert firm that consults on, designs, and develops fintech software, and we do it with a level of care and excellence that is rare and difficult to match. Working with us, you get access to a deeply skilled and experienced fintech design and development team with a particularly deep experience level in blockchain. You get the benefit of a team that is big enough for no key person dependencies to exist, but small enough so that you're always close to the principles. And you get the benefit of our reusable component library, which means we're able to launch your fintech product sooner than anyone else could at a comparable standard. To get in touch with one of our principals to see how we can help your fintech project to accelerate and succeed, head over to nona.digital to book a consultation directly. And now onto the show. Today my guest is Matteo Rizzi, who has been in the fintech space for longer than it's been called fintech, I think. His bio is too long to read out, but I've picked out a few highlights. In his more than 20 years in the space, he spent 13 of them at Swift, where in 2008 he co-founded Innotribe, the innovation arm of Swift. In 2013, Matteo became a partner at SBT Venture Capital, which was one of the first dedicated fintech funds to emerge. In 2014, he co-founded Fintech Stage, a community platform holding events and conferences on fintech globally. Today, Matteo is a venture partner at Bamboo Capital Partners, who focus mainly on impact investments in post-seed ventures in the African market. He's been nominated as one of the 40 most influential fintech execs in Europe and is also the author of The Fintech Revolution. Matteo holds a degree in computer science and a postgrad in financial transactions. He also speaks 5 languages fluently, which is pretty impressive. Welcome, Matteo. Thanks for making the time. It's great to have you here.
Thank you, Mike. It's a pleasure to be here as well.
And where are you at the moment? I think last time we spoke, you were in Italy, but you were on the way to Portugal. Is that right?
Yeah, almost. I was on my way to France. And then, from France, I joined Portugal, where my residence is.
Okay, so Matteo, let's get straight into this. So in the pre-interview, we discussed that you have a viewpoint or a belief that fintech has become part of something bigger. Tell me what you mean by this.
So the way I define it is that fintech is now a meta industry. It's not anymore an industry by itself. It started as an industry, a bit over a decade ago, where basically, and this is the content of my mythical presentation, The Game of Fintech Thrones, where I do a comparison using the Game of Thrones metaphor of the small armies attacking the big castles and the big armies, as per the startups attacking the banks over a decade ago. And back then, of course, exploiting the inefficiencies of the traditional players, fintech, started as a business in lending, in data, in payments, and so forth. So, and, also asset management, basically covering, remember there is this slide, Mike, with the Wells Fargo website. I don't know if you've ever seen it. And, every single word of that Wells Fargo first page of the website is covered with startups that are actually trying to hijack all or part of that business. This is how it all started. And then very soon we went into a collaboration phase. Right now, no one is thinking that, fintech will win or banks will win. Nobody has this talk again. And actually, embedded finance, where basically non-financial players are using fintech, especially, for the last mile, for the first and the last mile. The first mile with data collection, the last mile with the payments. you can see more and more players using fintechs to actually do their business. That's in this sense, I talk about fintech as a meta industry because it morphed into something that is an instrument, is a toolbox, is a toolkit for large financial and non-financial players to evolve in the financial industry.
I think that's a really good point. It's like obviously the financial players relate to fintech, but I think that's a good point that some of the non-financial tech giants are likely to become some of the biggest fintechs in the world because they've got the user adoption, they've got the market share, and they can just plug in, as you talk about this embedded finance. They plug in an embedded finance tool or layer, and suddenly they're an enormous fintech. So, look, there's some topical news at the moment in China about China clamping down on some of the big tech companies and making it very difficult to operate there, and it's sent the share prices all over the place. And while it's not particularly fintech focused, it has got me thinking, fintechs are now big enough to acquire other fintechs. We saw the Square deal recently. I think it was $29 billion US. They acquired Afterpay. And the scary thing about that is their valuation is now, I think last I looked, $123 billion. Because of the share price increase, they effectively acquired them for nothing. And I was listening to a podcast where Chamath was talking about this, and he says, expect this to continue. Expect companies like this to just keep doing these acquisitions, and they're basically getting them for free because the stock market rewards them for it. These guys are growing at a rate that we've never seen before. We never saw banks grow at this speed. We've never seen any companies grow at this speed. My question to you is, do you think there's a risk that these fintechs are going to become too big, too powerful, too quickly? That actually poses a risk to society? Or do you think this is just capitalism playing out?
Well, the question is articulated, but I think that there is certainly a risk that for certain fintechs, that used to be startups 5 years ago, the only way out is IPO. And therefore, for a company to be, the market is actually way more critic, way more mean, than investor and merciless, right? So if you have a company that is valued by VCs like a 30 billion, but is actually losing money for 5 years in a row, maybe it's not that easy to put them into the public market because it looks like sort of small investors are dumb, but they're not, and they will understand the difference between a very risky investment and one more comforting, in what the future of the company looks like. So this is one point. Second point about like a consolidation. I think that we haven't seen yet a bank acquiring in a significant deal. Société Générale acquired Chime, which is a B2B digital bank, but we're talking about like hundreds of millions of like below $1 billion sort of acquisition, right? So it is significant, of course, no big numbers, but here we're talking about banking buying unicorns. One could argue, right? So you got the TransferWise or the number 26 in the like tens of billions of valuation. They have probably as many clients, if not more, as a traditional bank. But these clients are the precious ones, right? So are the ones with data, the youngest ones, the one with more familiar with digital transactions. So the one that are going to like come in the workforce and be able to invest in 5 or 6 years from now. So very it's a great crowd to acquire, right? But we haven't seen it. On one hand, because probably banks think they can do it by themselves, with some sort of either a spin-off or like a light sort of digital platform that they can implement. On the other hand, because they might not have enough cash, which is, we have seen it, now Revolut is bigger than, all of a sudden with last valuation, but still on paper, we're still talking about I have I don't know the in the ranking, but probably top 20 or something, and it would be interesting to check. But again, despite being as big as the major players, their fundamentals are simply uncomparable. They might be comparable. So when you say also, Mike, we have never seen that growth. Let's talk about which growth we are talking about, because you might be growing in number of clients faster than anyone else before,
but not profits.
Not profit, not revenues. And you might not have figured out what the business model is, because I have four TransferWise accounts. I'm using mainly two. I also have a Revolut one, which I don't use, and I have a number 26, which is basically my day-to-day wallet. Are they making any money with me? Maybe a little TransferWise, because I have, it's my company account, so I'm dealing with some currencies and stuff. But we're talking about dozens of transactions, right? Yeah. So, long story short, I have 8 accounts by myself. I'm one individual. But if they are making $30 with me in commissions per year, is the end of the world.
And I guess this is why a lot of people think that a lot of these fintechs are grossly overvalued, because it's obviously on future earnings, on future, which is not there yet. And I mean, you raise a really good point. It's a very good question. Is what growth numbers are we talking about? Because you're right. I am talking about users. The user acquisition speed is faster than it's ever been. However, these companies are not making profit, as far as I know. Whereas the banks are definitely making profit. It's a very good point, and I think also your point on it's tied to it. But the stock market reacts a lot more harshly and a lot more ruthlessly to anything, because there's no. It's different to an investor, and I guess it ties back to the same thing: is that these valuations that we're seeing are very frothy, but when they list and you have the public open to making their own decisions, and then they can see the fundamentals, we might see a bit of a different narrative.
Especially, sorry if I interrupt you, because one thing that financial system regulation did right is the fact that there are now very strict risk profiles associated to investors. So it's not like before, or in Leonardo DiCaprio, Wolf of Wall Street movie, when anyone can recommend anything to anyone. Right now, nobody can recommend, suppose Revolut gets in the UK stock exchange. Nobody can recommend Revolut and say that it's not a risky investment, right? Yep. So only very, expert, high risk profile could invest in it. Yep. And we all know that we might be all sort of, cool and flexible when it comes to invest 2,000 euros in Bitcoin. But the moment you trust someone with your 200,000 lifetime savings, I'm not sure you're going to put it on Revolut at number 26, even if, I'll give you an example. So sometimes I think about it. Think of a number 26 or a TransferWise who are today roughly half of the Revolut valuation. One could say, listen, let's take, there are more or less 4 categories of them. There are the starting ones, the around $1 billion or $2 billion ones, the 10s and the 30s. These are the 4 categories. One could argue, for example, that Starling Bank in the UK, which has been declared as one of the few profitable neobanks, they are very likely to reach, tens of billions of valuation, and the last one I think is a single digit, right? So one could argue that if you put 200K there right now, you're very likely to double or triple it in IPO range, which is 2 to 5 years, maybe. Worst case scenario. I wonder if you ask 100 people, how many would say, I'm going to go for it.
Yeah, very few that aren't VCs, but that's a different kind of investor, right? And that sort of leads me on to my next question that I was thinking about is fintech is a hot space, frothy valuations, massive capital flowing into the system. Lots of our clients are raising. Basically, we're seeing our clients raise a lot more money than we've ever seen them raise in a very short space of time. So whether we're raising $5 million, $10 million, now we're seeing our clients raise 60, 70, 80, $100 million, and seemingly a little easier, right? These are good businesses. They're not charlatans. These are serious operators. But it's a very frothy space where there's a lot of quick money. Fintech is very sexy. It's very hot. We see a lot of scams. We see a lot of charlatans. And I'm not just talking about in the crypto space. So there's tons of charlatans in the crypto space, but there's also tons of charlatans in the fintech space. And my question here is not so much your opinion on that, but more in your position, you must have seen and see this a lot. What are some of the fundamentals that you would look for in a fintech founder and a startup to assess the likelihood of success or the legitimacy of the startup and the founding team?
So far, Mike, I've been working with professional VCs, all over. You mentioned SBT Venture Capital. You mentioned Bamboo Capital Partners right now. In between, you get Omidyar Network, which is the fund of the founder of eBay, and Societe Generale and Intesa San Paulo. It's called Neva SGR, so the corporate venture capital. So these are serious people, right? And when you deal with this sort of VCs, I want to say legal soundness, due diligence is at the basis. So and again, let's categorize which scam are we talking about, because there are scam as something is an empty shell, or I have seen a startup operating on a software that they didn't own, and it was owned by another company that nobody sort of realized that they had to pay royalties to that other companies. Or, for example, I've seen companies with people in a country and members of their board were super important VIP person of that country, super influential for them to get in contact. So the moment they turn their back to the startup has basically nothing. So all this is, I want to say, basic soundness, due diligence that you need to sort of set aside and be in good. So this is one. But let's assume that you have done this, right? Now let's talk about the fundamentals. So there are actually, an analysis of the team is super important for a million of different reasons. But, very often realize that that company is a side job for the founder. And despite being, on the facade, despite being the main activity, it is not. Or, there are actually very fundamental components, and again, it depends which stage you're investing in, but there are fundamental components that startups such as financial planning, for which startups are completely unable to provide the right numbers. So the quality of the output when you ask for financial transaction, we can tell a lot of stuff simply by looking at how the Excel of the financial planning has been.
And it's 100%. I want to drill into that because, any VC knows that any projection given by any startup is total bullshit. It's guessing, right? However, it's still a very important and critical part of the due diligence phase because by giving a discounted cash flow or even just a cash flow projection, the investor can tell a lot about how the founding team thinks. Do they have the acumen? Are they realistic? Are they looking at these? Are they giving low road, mid road, and high road projections? I remember years back, we were in a sort of accelerator type business and we went very deep into generating data rooms, learning about data rooms. And I just remember being so frustrated because we did a week's worth of doing a discounted cash flow. And then the VCs who were training us said, and you know what, this is all total bullshit. No one's ever going to look at this. They're going to throw it away. However, learning how to do it is what they're looking for. Can you do a projection? So 100%. I wanted to drill down on that because I think a lot of people misunderstand that. I think a lot of people looking for investment for the first time from sophisticated investors think that they're going to believe what they give them as a projection, and there's no ways they will. They're looking for how they think. They're not looking for the projections.
Absolutely, and if I can give a live tip, to founders, having a financial planning that is completely customizable with the numbers. And the spreadsheet is actually formatted in a way that, the financial side of the VC can play with it. Is already fundamental. This is already thinking in a way a VC would think. You want to stress.
What happens if I plug this in? What happens if I plug that in?
You want to stress the financial model.
Goes up?
Exactly. You want to stress the financial model. You want to say what it looks like if you say that you're going to get into 5 countries in 3 years and you only get it into 2. You want to get, what is the minimum number of clients or subscriptions or whatever software licenses that you have to sell so that the company will survive in case of distress. And especially, in a post-COVID scenario, now nobody nobody can put aside any circumstances, So the COVID circumstances are unprecedented.
Yeah.
Which and this has sort of raised the bar in terms of what could happen.
Yeah.
Especially because now we are not we're not protected anymore on any other wave of worldwide proportions. Now hopefully it won't happen again, but the fact that it did happen, in an unsuspected times, I believe, it really raised the bar. And lastly, so we talked about legal, property, IP sort of soundness, and then financial model, resilience, sort of thought through, way of presenting it. And lastly, I want to say credibility of the team itself. So because you have a lot of people with zero experience in startups, building up a startup, which is great. And all of a sudden, because there is some hype, we see a lot in Africa, for example, right? So because now there are 3 unicorns in Africa in the past 12 months, and which is 3 times anything that ever happened into the continent. All of a sudden, anyone with 200K revenues is valued 15 million, because it's 15 to 20 times what they think they can do in 12 months from now, which are completely hyped sort of valuation. And this is how I say, or I value the credibility, right? Also, because when you are at the beginning of your entrepreneur journey, especially if it's your first one, you really should not look at sort of in-flight valuation as quick and as quick and as early as you can, but really look at who you get in bed with, which type of resources you can access by getting that money in. Because by definition, if you could afford all the intelligence, all the experience, and all the right brains, at the beginning, you wouldn't be sitting there asking for money, right? So you must be able to figure out what else these people you're getting in business with, they can bring you on the top of money.
So, I didn't even make notes about this, but I'm just thinking the buy now, pay later craze. It's a craze, right? It's not quite a craze. It's almost a craze. But we're seeing it everywhere. We're seeing it in, you can hear from my accent. I'm from Africa. I'm from South Africa, but I live in Australia. And the Afterpay deal is a buy now, pay later deal in Australia. Obviously, you know this. I'm saying it for the listeners. In Africa, we haven't seen a massive buy now, pay later trend yet, but it's coming for sure. And I guess my question to you is, and I've actually got the CEO of OpenPay coming on the show soon, and I've actually asked him. He's a super cool guy, and I said, hey, I'm going to ask you this question. And the question I'm going to ask him is the one I want to ask you, but it's much more loaded to him. Buy now, pay later to me is just credit by another name. It's still buying shit now because you can't wait and paying for it later at a cost. And I guess my question is how is buy now, pay later not just continuing the debt cycle? What are your thoughts? I'm really interested in your thoughts because you're a very seasoned fintech veteran, but you also have your sights set on Africa. And in our pre-discussions, you were saying it's set on Africa because you're sick of just making rich people richer and you actually want to help, make a difference. Just talk to me about your thoughts of buy now, pay later. Have I misunderstood something here, or is it just credit by another name that's just going to get people into trouble? and still requires responsible using behavior, which won't be there, like credit cards aren't there. Just tell me your thoughts on buy now, pay later.
Yeah. So I will start with a disclaimer, and my disclaimer is the fact that I find payment space, utterly boring. So I'm not super interested in, in that specific part of the business to start with. But of course, I have an opinion, especially because in Africa, as you rightly said, Mike, I could name you right now 3 startups that are raising funds. They're actually in our pipeline that are in the buy now, pay later space. So we have to analyze it, right? And I tend to agree with you. I mean, the only difference is that assuming that you can be smart enough to evaluate the person that is making the payment and have and give her, the right approval to do this. The only difference between this and basic credit is that maybe, strong accent in maybe, you can collateralize it, right? Because there is a good behind. There is an actual good behind it. It's not like pure credit. But at the same time, I could name you in Nigeria, for example, and Nigeria is a space where SME and consumer credit exploded. There are at least 2 dozens of startups dealing with this. Half of them, there are multi-million dollars funded. The Quick Check or the Fair Pay of this world, whatever. One way they choose to expand is actually to make a deal with, for example, telco companies. And all of a sudden, what they do is they make credit with a purpose, and the purpose is, for example, buy a phone. Now, tell me the difference between buy now, pay later, or an agreement within a startup and an MTN, where every time that a client of that startup is buying a phone, is receiving a credit, and he or she is able to pay it over 24 months. There is no difference, right? It might be in the user. The difference might be in the user experience. Why? Because very often we sort of we made the mental link with the buy now pay later space with actual objects, with a phone or with a motorbike or this type of stuff. But the difference is that if we start doing this for the grocery shopping at the supermarket, that's not really credit. Nobody is asking for a loan to buy grocery in the supermarket, right? But then it becomes a dangerous tool, because if you start using it for literally day-to-day sort of shopping experience or day-to-day expenses, for lack of a better word, then you might want to educate your clients as well, because the interest rate might get to the roof. And that might be misleading, for investors, because it is not sustainable. You can't have like a 5% per day just because you want to pay like a $20. You imagine it. So $20 today, if 5%, it might be like $1 per day. So it might be insignificant, but in a week you're going to pay $7 more.
Your annual interest rate is just through the roof, right? It's hundreds of percent.
Insane.
Compounded. So it's death by 1,000 cuts to the unsuspecting consumer.
Exactly.
So it's a super interesting space, because I'm really looking forward to this podcast, because he was so open. The CEO, he said, "Absolutely, please ask me. I'll explain it." I'm really interested to know what his response is. Something that was interesting about when I was doing my research on you is you've got 2 formal qualifications. You've got a computer science degree and you've got a financial degree. And I think that's going to become more and more common, but I'm guessing it wasn't very common 10 years ago or more. And the question that evolved from me there is, as somebody that's a computer scientist, but also as a postgrad in finance, How important do you think it is to have a technical co-founder when you're building a fintech? Do you need just very specific financial and fintech knowledge? Or is it as important to have a technical co-founder as it is in building a Google or an Amazon?
So, disclaimer, I think that I've used very little of both, which is a bit of a paradox because I've never written a line of code for work,
Okay.
in my life. Beside, of course, I've never been paid for coding, put it this way. Okay. And also, I think I've never built a financial model in myself because because I'm in a VC space, so I'm more like analyzing what
other people's models. Yeah.
Exactly. But at the same time, of course, that's super useful because you can't really bullshit me on a tech side, if you're a CTO of a startup. And I actually happen to be in a very interesting side of the tech infrastructure because I built 2 data centers back in a day where when it was very difficult to fill them in. Right now, there is not enough space for racks, in data centers. I still remember we built one in Paris. I think it was 1998, 1999. And then I built in the year 2000 another one in Italy for another client. By building it, meaning, choosing the providers, the firewalls, the racks, sort of validating the architecture, but most importantly, validating the business model to start selling this,
Yeah.
And back then, it was super cool to outsource your emails, so people that were putting their emails outside, it was called managed infrastructure. It was completely like it's funny. It's only 20 years ago, but it looks like 3 galaxies away. And these digressions is to answer your question. So there are actually half of the startups that we've seen. Technology is a commodity, and there is no there is no or very little sort of hiccups that can surge when you do, for example, buy now, pay later is a good example. It's rather easy to implement. You can have your own source or outsource this sort of data infrastructure to build your credit score. Do your own with some IPs. Buy from someone else. You want to add, how fast someone types in their phone or how accurate, talking about Africa, how accurate this person is putting, her address because there are very little actual streets number in Africa. You want to add some psychology to it. For all this, there are components that you can build in, and build an infrastructure. That's it. Now, what is less common is someone who is able to stress the scalability of the infrastructure, do intrusion testing and the resiliency of the infrastructure itself, especially when you are being Tetris-like putting together, different components, and lastly the IPs, how much the barrier, the understanding what is the barrier to entry, the technological barrier to entry when you build an app.
Yeah.
So is that important to have a CTO? Absolutely. CTO and CFOs for sure. Because you can see very often that the startup who, outsource, you can, of course, I can build a buy now, pay later company today without writing a single line of code. I send some specs to India, they're coming back, 30 days later with a prototype. We can test it, scale it, but I don't know, I don't own. I might own the code, but I don't own the know-how. So At the end of the day, what happens is if you don't own the infrastructure, everyone is using the whatever cloud, pick one, whatever. But if you don't own the code, and if you don't deeply understand whatever you want to add, what's the difficulty and the timeline and the risk of modifying, especially early stage, is very unlikely that in 3 years from now your infrastructure will look the same as today. Oh, yeah, but if you outsource it, you don't control the cost, and you don't control, most importantly, the fact that you might have been outsourced to pay less to someone that is not going to be there in 3 years from now. So so. Is it important? Is it like fundamental? I think that's my experience, right? Unless you're really building something super light, where technology is not an issue.
It doesn't matter.
Exactly. Exactly, because your value added is more into the whatever smart commercial approach, or because you have a partnership with someone already so big that guarantees you a number of critical clients for which you can focus more on the execution than on the building itself.
Yeah, got it. I want to change gears a little bit because I'm also conscious of time. So what trends do you see just getting stronger over the next few years in fintech? I mean, we're seeing a lot of trends at the moment. We're seeing a bunch of different trends in crypto. We've got the DeFi space. We're seeing buy now, pay later. We're seeing card issuances, with things like Marketo, things like that, and neobanks and challenger banks and all kinds of these buzzwords. What are the trends that you think are just likely to get stronger over the next, let's say, 5 years in the fintech space?
So if we can put Insurtech in it, Insurtech in emerging markets, for sure.
Tell me more about that. What do you mean by that? You just mean an underserved market because there is no insurance in parts of Africa. So tell me more about what you mean.
So, for example, you know as well as me, I think that the overall insurance market penetration in Africa is below 3%. It's a very below 1% in some of the countries. And I'm talking about not only like a car insurance, but also like agri-tech combined with insurtech, for example. To be able to protect the crops and being able to not to discontinue in case of unpredicted climate events. To be able to protect the work of the farmers, for example, right? But also the whole digitization of the insurance market, insurance and reinsurance, actually. That the reinsurance market, it is completely dealt with Excel spreadsheet and actual paper, in Africa. And so in between insurance companies. Yeah. So this is typically a space where I see a lot of movements. It's a nascent, but there is no reason why it should not be developed, because history says that whatever fintech does in 10 years, Insurtech does in 2. So if you simply because the sector is more focused, there are less players, of course, and there is more money. And by more money, I mean there is less Revolut and TransferWise and Number 26 who are eroding the market, and the power is still with the incumbents investing in insurtech startups. Okay, so this is
seeing a lot of movement. Are you seeing a lot of movement in the insurtech space in Africa? Are you seeing startups starting to emerge?
Yeah, absolutely. Yeah, that's why I'm saying this. Yes.
Okay.
So this is one, and another one, which is, of course, I'm a bit biased because it's my space, but financial literacy and financial inclusion. So being able to build fairer, cheaper, near real time, and with open source infrastructure, financial services, from payments to credits. There is this initiative, sponsored by the Gates Foundation, called Moja Loop, and it's the initiative of my good friend Costa Peric, a former colleague of mine at Swift. And they have recently signed an agreement with MAS, the Monetary Authority of Singapore. And their objective is to democratize access to financial services. And they literally built a set of APIs where you could create, for free, and I stress for free, a financial services infrastructure, at the lowest cost to be able to include as many, as many individuals, in a given ecosystem. Okay. And now they are pushing it even further because they created an infrastructure in Africa to push it. So, but I'm not saying that the trend is free financial services infrastructure for all. The trend is, banks, insurance companies, and telcos, these three guys together, start collaborating with startups to give access to the bottom billion, what we call the bottom billion. And this is actually going to digitize a part of population that today is not. And I could actually name countries like Mozambique or Angola or this just to name two Portuguese-speaking countries that are not in the radar of many investors. But we're still talking about 120 million people combined. And these 120 million people combined, a bit more if you take all the Portuguese speaking Africa, they don't even have Uber, right? Yeah. So that's how the potential for digitization or financial services digitization is, right? So that's the second trend I would aim. And the third one, I would say decentralized finance. Simply because the moment in which people will understand that they can borrow money peer-to-peer seamlessly from, and they could also invest, equally as an equal opportunity anywhere in the world, and be able to get actually a fair interest because you cut all the official sort of cost, of lending money today. This is going to be a revolution. It's going to take maybe another decade. But, I always say that there is no, maybe, Republic, maybe, but there is no real global crowdfunding platform where anyone can invest anywhere, right? Yeah. Now, I can assure you that if I could put, a few, dozens of thousand euros in a market that I know well in Africa, for example, giving debt to one of the lenders that are lending, in the B2B space, I would do that. Because still, giving 5 or 6% to me and overall 13 to 14 to the startup is still 2 to 3 times better than what banks would do. Yeah. Right. And I would get, a decent yield. By the way, I will also have the impression that I'm doing something,
you're doing something good.
Exactly. Yeah. And this is where you can sort of marry, the financial inclusion, the doing good, the impact investing, and the business side of it, what we call the double dip, right? You do impact investing, but making money. So, and you build an investment that is sustainable and is not simply sort of living on grants or on donations, which is the challenge in Africa. It well, right?
Yeah, absolutely. Great answers. I'm conscious of time, so I want to move to some very quick answer questions. So rapid fire questions. So firstly, what scares you in business?
Charlatans.
What content are you consuming at the moment?
So I listen to podcasts also because, as you can see in my back, Breaking Banks is one of mine. And I am consuming a lot of Blinkist. So I'm more of a quick.
I love Blinkist.
Quick facts learner than long. My attention span is limited. So anything that my attention span can deal with, I do.
What's the last book that you read cover to cover? And Blinkist don't count.
So Sapient.
Sapient or Sapiens?
Yeah. Sapiens. Sorry.
Sapiens,
sorry.
Great book.
Sapiens,
great book.
Yes. Yeah.
What is something that you're going to be doing in the next 7 days to improve yourself or your craft?
So I don't believe in like weekly programs, because my challenge is to be constant. So my challenge for the next 7 days has been the same of the last 7, being able to meditate, to eat well, to, do something, be grateful, do something without interest and without being asked for someone else, and just be kind.
I love that. I absolutely love that. I relate to that very deeply because I'm actually going through a process myself at the moment, which is just, if there are just 5 things that I do every day, what would those 5 things be to give me the best chance of, I'm going to use the word success, but success means different things to different people. Absolutely. And it's always those fundamentals, right? It's like, it's meditation, it's breath work, it's moving your body, whether that's yoga or push-ups or whatever it is, just deliberate movements. It's connection with people. It's gratitude. It's like, it always comes down to these fundamentals, but I'm so with you on that the challenge is to do it day in and day out, every day, not in sprints, which is how we talk to work these days. So I'm right there with you.
And if I can add something, Mike, here, because you've been talking about something personal and me too, but I want to add the fact that one of the best things that you can learn about yourself is which type of person are you, and because if you understand this, then you're going to put the objectives to yourself according to it. I'll give you an example. I've been really witnessing literally the rise of all the fintech unicorns that you can think of. I had the Revolut beta app on my phone. I was the one presenting TransferWise to the Swift community. And it depends how you look at it. One could say, Matteo, how dumb were you not to take 0.5% just for your time, or why have you missed all this, right? But then one thing that I understood about myself is that I wasn't born to be a millionaire, and I would not be happy, with 20 million more in a bank, and I always would choose freedom over comfort. This is one thing I understood about myself. And the second thing is that I don't need money to buy what makes me happy. I truly don't. Now, you must say that it's easier to say when you have enough money to buy your freedom, granted, but a lot of people in my position would be frustrated because they haven't made a Revolut or a TransferWise exit, which I'm not. I always tell it as a nice story, as a learning, and I wrote a book about it. You mentioned Fintech Revolution, but I actually you're always prouder of your last book, and my last book is Talent and Rebels, where I tell the story about people not adapting themselves to work in corporates and find alternatives way to contribute to innovation and to the work environment. So being able to understand what really drives you is the most important. Is the quest that everyone should focus on first.
Yeah, we could talk for hours about this. It's easier said than done, right? Because I agree with you completely, and I often wonder this, and we won't go down this tangent now. But when people say find your passion, find your purpose, that's a very difficult thing to do, unless you're very lucky and you're kind of born with these extreme passions and purpose, and people are like that. And when you scratch a little deeper, most people, I think, are my purpose is to build this company. No, that's not your purpose. That's the thing that you're keeping yourself busy with. What's below that, or 3 levels abstracted. And I love that. I think that's really it's wise words, and I'm impressed that you've actually managed to figure that out, because it's something I think about a lot. And I speak to a lot of business owners, a lot of varying degrees. I speak to billionaires. I speak to new founding startup founders of their first rodeo. Very, very, very few of these people have truly found their passion and their purpose. When I ask them what it is, it's usually quite light, quite surface, and not at that point. And you said some things there that are quite deep. To be able to say that you'll always choose freedom over comfort, I'm going to certainly sit and think about that. Matteo, we're pretty much out of time. It's been super cool chatting to you. We spoke about a lot of stuff today. If there was one thing that you could leave with the listeners out of everything we spoke about, what's the one thing that you would want them to take away with them?
So maybe a short personal story. You see a lot of logos behind me, and all these are either personal companies or companies I have founded or companies I am collaborating with, like Breaking Bags. And of course, Bamboo Capital Partners is a missing logo here, where I think that my strength is I'm not dependent on any of them. And I don't need any of them to still be purposeful and to be able to wake up in the morning. So try to be as independent as you can from the thing you do, and start be depending as the thing you are, because because it's the only thing that will always be there, right? And through how you understand you are, then do the things that you do. That's it.
I love it, Matteo. That was fantastic. I wasn't expecting for this to go down that direction when we start speaking about fintech, but it's awesome that it has, because it gives something like fintech, which is quite a sort of surface level industry, potentially some depth and some meaning, which is fantastic. To the listeners, I'm sure you got some value from today. If you listen to the end, I'm sure you're wondering, what the hell is this, like a self-help podcast or a fintech podcast? And it's both. And that's, this is how you become better. This is how you become a better leader, a better person. This is fantastic. Matteo, thanks so much for making the time. It's been awesome speaking to you, inspirational and surprising, which is great. And I appreciate you making the effort.
Thank you, Mike.
And to the listeners, thank you for listening. If you would like to discuss your fintech project with a team of experts in design and development, you're welcome to book a call with me or one of our principals on our website, which is www.nona.digital. And I'll be back next week with another episode to explore the Fintech Founder Journey.